In 2008, something happened that no one thought was possible. A company that had been around for more than 150 years just collapsed. This wasn't some small business. This was Lehman Brothers, one of the biggest names on Wall Street. And yet, in a matter of days, it was gone. What's crazy is, this didn't start with a huge mistake. It started with something that seemed completely normal: real estate. At the time, housing prices were rising fast. Almost everyone believed one thing: that prices would just keep going up. So Lehman started investing heavily in mortgages, not just safe ones, but riskier loans too. People with unstable incomes, weak credit, uncertain financial situations, they were all getting approved. And for a while, nothing went wrong. In fact, everything looked perfect. Money was flowing in, profits were growing, confidence was high. It felt like a winning strategy. But here's the problem. It only worked as long as housing prices kept rising. The moment they stopped, everything started to crack. People began missing payments, defaults increased, and suddenly, those safe investments weren't so safe anymore. At first, it didn't look like a disaster, just a slowdown, a small dip, something the market would recover from. But underneath, the damage was already spreading. Lehman had invested so much and borrowed so heavily that even a small drop started hurting badly. And when investors noticed, panic kicked in. This is where things moved fast, really fast. Banks stopped trusting Lehman. Investors started pulling out. No one wanted to be exposed, because in finance, once trust disappears, everything starts falling apart. Then came the moment no one could stop. On September 15th, 2008, Lehman Brothers filed for bankruptcy. Just like that, a 150-year-old giant was gone. But the real shock came after, because this wasn't just about one company. It triggered something much bigger. Markets around the world started crashing. Banks stopped lending to each other. Businesses couldn't get loans. People started losing jobs. Families lost their homes. What began as a housing problem turned into a global crisis. The 2008 financial crisis had begun. And when you look back at it, the most surprising part is this: Lehman didn't fail overnight. It failed slowly, through decisions that felt safe at the time, through risks that didn't seem risky until they were. There are a few powerful lessons here. Don't assume things will keep going up forever. Be careful with borrowing too much. And most importantly, just because something is working today doesn't mean it's safe. Because sometimes the biggest mistakes don't look like mistakes at all until it's too late. If you found this story interesting, subscribe for more real financial stories that can change how you think about money.